Good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast for October 26th, 2023. We'll start with the hybrid portfolio, 30-minute charts. I thought we were. Just a minute. Yeah, there we go. All right, so this is Alcoa, no trade today. Sideways quiet channel. This is AI. So that was yesterday's harsh sell-off. Gap up to a PSAR flip, took the long, and a 1, 2, 3 or a 2-bar low exit for about an R. I thought about the COTA 2 continuation, didn't take it, missed that trade, and then it closed right in the middle of its range. So we got a little taste of it. Amazon tried the initial short for an R, later tried the SSC entry for about half an R, no overnight risk. That did not inspire us with confidence. This is Caterpillar, tried the collapsing dragon continuation short for an R, took the dragon exit in a measured move downward. This is, let me see if we can open it up a little more. Yeah. This is Cliff. I missed the continuation trade long. I missed the short span of control. CVS, I missed the collapsing dragon continuation. Walt Dismal, I missed the continuation short. A lot of my attention was on Mattel today, I will be honest. Dish Network, no trade. This was an exit. I forgot to mark this one up, sorry. This was an exit in here at the PSAR flip, so we gave back a full R but captured an R. Devon Energy, missed the short. Electronic Arts, took the collapsing dragon continuation. I'm holding that one over the overnight. And that's about 3R in hand. Emerging markets got 1R on the intraday COTA 2 short. ETHE, this was a PSAR flip and supported fall crossing. I was slow to get out of this one, I feel like I should have gotten out in that second recovery bar, but I waited for the dragon skin exit, and I gave back more than I kept. But we still made about an R&a-half on it. Mexico got a gap up and go for an R, then a sell-off, and then a COTA 2 continuation for about another R&a-half and no overnight risk. Brazil, we got the late entry on the COTA 2, cash 2 and no overnight risk. Intel, no trade. I missed the short. IP, missed the short, and then the recovery. That was some amazing intraday volatility. The 3-minute chart looks good on it. The 30-minute was untradeable. Real estate, a gap up and PSAR flip, and I'm holding that one overnight as a defensive play because it's in the summer. We have an R in hand with cushion. Coca-Cola, no trade. Missed the short. Regional banks, I missed the long and the COTA 2 long. Matt, wow, was this any good? So there was a 9% sell-off to this, and then there was a morning hook and a nice trade, and I will show that as the sniper trade of the day, but there is no way I'm holding that one overnight. McDonald's, short on the collapsing dragon, holding that one overnight, and then just as I was getting ready to cover it, the bottom dropped out of it, and I was like, well, you know what? Let's see what it does tomorrow. I'll hold 2R going into the overnight on the short side. Merck, I missed the morning hook. Microsoft, big gap down, and then a continuation short captured 2R with a standard dragon skin exit. Marijuana, collapsing dragon continuation, 2R with the dragon exit. There was a lot of that today. Same thing with NVIDIA. No trade in clean energy, no trade in Rivian. I really missed that one, being I was focused on Mattel, but man, that was a trade. And in retrospect, I was happy with Mattel, but then kicking myself because I also missed the second leg down in Rivian, and then I missed the rebound. So that was just opportunity lost. In the S&P, you can see that was basically just harsh move down all day, a 50% retracement, and then a collapse in the last little bit. So this was gloom all day in the S&P. This was not a good day for the S&P. Treasuries, on the other hand, was a nice 2R SSC, no overnight risk. Tesla was 1R short on the collapsing dragon continuation with a dragon exit, and then no trade in U.S. Steel. This is the sniper trade of the day. Let me just kind of show you what was going on there. Now let me show you the other one. Oh shit. Now we'll go with this one. So Trader X and I, who are we're like accountability partners and trading partners in the morning, we both triggered on the fact that Mattel had a 9.5% adverse gap. That'll get your attention. That's the size of a full range stat. It gave an OR3, which I took with the standard risk box. So the entry is at 1. Risk box is the yellow box at 2. Second position at 2, which is a 1, 2, 3 entry. At 3, I went to no lose plus dinner for 2 as I noticed this thing was working. I thought about a third position at 4, but didn't take it when the PSAR flipped. I held it through the Bollinger Band mean, held it through the Kata 2 at 5, and then took the standard exit at the end of this long PSAR flip, going into lunchtime. We cashed that, and that was worth about 5R. And the point we made in the Foundations Q&A, where we went through this in detail, we probably spent an hour deconstructing this chart, and then also deconstructing the ETHE trade of the day. The main point was, this is a perfect example of hybrid trading, that I had exited my swing position the day before routinely, missed and avoided the gap, knew it was in play, used standard trade frames and standard risk boxes. If you feel nervous doing that, reduce the number of dollars at risk per trade rather than changing the trade frame or widening your stop. Use your standard trade frames, and if you have to, reduce the size of your risk. And what made it abnormal was the size of the gap and then the harshness of the sharpness of the morning hook reversal. But that that sell-off and then morning reversal gives us an amazing morning hook with the WMB3 and the Anderson regression line stretch. This is like picking up apples that fell off the truck as it went to the market. It made too sharp a turn, and then a bunch of opportunistic apples fell off, and we're just picking them up on its routine way back to the market. By the time price gets back into the lunch, look how lack of volatile this is. It's back at the Bollinger Band mean, and this is ordinary and routine. And that's a 50% retracement from the sell-off back to closing the gap. Now, the rest of the day is interesting, but that's what routine intraday trading looks like. And the sooner that you get back to a calm state in the eye of the storm, the better off you'll be. That takes practice and a rigorous commitment to the standards and the norms and the templates. How do you know to target this one? How do you find them? Because I have an alert that ranks things by the size of the adverse gap. And when it moves an MMRB off the low of the day, I get another alert, and then I'm ready for the OR3, which is another alert. So that's how I do it. I just use alerts. All right, let's look at the traders. See if we can find them. All right, let's go with, here we are. All right, so here's Brian. Brings home 1.02R with a standard COTA 2, and then a re-entry, and then a second entry, which, he tried, I'm sorry, this was a PSAR flip, which he quickly cut. We could have gotten long here or here. He gets long here, but he nets out 1R for the day, and almost 23R over his last 50 trades. So continuing to do great work on the Kiwi. This is George. 0.5 on the collapsing dragon, and exit. This is slow on the exit. We could have saved a little bit by exiting down here. This is a good short. We stayed too long, I think, although it's only a 0.6. This one is not a collapsing dragon. It's not a collapsing dragon until it gets below the bend of the RL10. So that's not even a COTA 2 to the downside, because you have a higher high than you have here. That is not one of our patterns. What this should be is a COTA 2 entry long right here, and then you get paid on this trade, and then you can play the collapsing fall, the supported fall crossing, and then capture that entire move, or wait for the collapsing dragon here when those two levels collapse. So this is not a short, that is a long here, and then this should be short with a second position or a first position there, and then really ride that one home. Excellent work on the, as it rolls over, this is a collapsing dragon because the R10 belly was breached. PSAR flip, standard risk. I think your exit should have been here at the edge of the dragon, as opposed to suffering all of that. But that's still pretty good for 0.5. And we'll be happy to take that one. Dwight posted his first 3 charts. These are live paper trades forward. Collapsing dragon was a bar late getting in, but that's a good exit at the dragon skin. This is a bar late entering. I think you want to get in at the piece, or you could get in here or there. Standard risk. Gets paid, and I think your exit, when this R10 rolls over, I think you want your exit at the top skin of the dragon and not the PSAR flip. This is the collapsing dragon occurs right about here and here. The VWAP violation is there, so there was probably 5R available on that downward move. But nevertheless, that nets 1.75 on that leg, and that's good work. DIA gets paid very well, misses the collapsing dragon multiple times, a couple of quick scratches for 3.34R. Good work. Gets long. This is the 2.8R. I think this was a money management exit, couldn't stand the heat, and then had to suffer this. But then you were in the zero state, got short. This is a great cover. We could re-enter here. I would take that shot and exit here. Probably get short there, and then I would get long here and or here. And this was really good work today. 6.7R on this one, so I think you netted probably 10. So there's a future for you in this, is what I would say. That's after 3 weeks in the foundations course. This is the daily report. Let's get this set up. Come on. Mousing around. Alrighty. Sniper trade of the day you've seen. I want to show you something on this chart on the 150. For those of you that have been here more than a minute, you will recall that when we got this rollover at the 150-day high, we were pretty quick to identify this as leg one, a recovery to a lower high, leg two, recovery to a lower high, and that we were concerned about leg three getting us down to 415, and today we got to 416. So that is that's like a 2.5, that's a 10-week adventure in swing trading in which both sides of that trade gave us positive expectancy. But notice how important it was to stay connected to the changing nature of the market, which was rising river, peak of the river, and then slowly roll over, and now accelerating to the downside. And now we have this all-important support level, which happened way back in the summer, all getting tested right now. And if that fails, 390 is the next price lower. So that's another $25 potential to the downside if this support level does not hold. So, word to the wise. That's what I want to show. So what we did, what I just showed you then, was that 150-day high. That's what that purple box means. Leg one, leg two, leg three. This is the support level that we just entered today. We're halfway through that support level at the 30-day low. If this doesn't hold, look out below. All of that goodness just left the building. Not just, I mean, that's a 10-week decay. But that's the difference between swing trading and long-term buy and hold. That is potential profits in both directions for those that know how to trade. That's what makes it worthwhile. Today we entered bearish volatile. We are 2.5% below the 200-day moving average. Strong bearish trend according to ADX. Volatile conditions, risk off. Bearish volatile. The bottom has fallen out of this thing and volatility is rolling over. In the Dow 30, everything is on an auto framer. Lots of symbols are collapsing under their own weight. The only thing that's not, IBM had an upside break and Merck had an upside break, but really the tail of the tape is everything down. Look at the leaders that got smashed today. Apple, the red symbols in red are the ones that were the biggest percent losers of the day. Apple, Microsoft, Nvidia, and Tesla. That tells you how bad things are. In the ETFs, all of these red NDXs are things that are breaking down over the different look-back periods. Just about everything is on an auto framer. That's how bad the sell-off has been. It's a buyer's market for the auto framer. It tells you how bad it is. Chevron is at 9-1 on the downside. The mid-caps themselves, the Russell mid-caps, are at 5.5 to 1. That's how bad it is. The S&P is at 3.6 to 1. That's how far the mighty have fallen. That's what's important. They're being dominated by the winter. All the red boxes are the big breakdowns. There's very few signs of green anywhere. And those are, Mexico and Brazil had good days, but I wouldn't bet the farm on them. I'll trade them intraday, but I'm not betting the farm on them. Because if the world goes down the drain, they're going with it. Trading values, this list, marijuana, Tesla, uranium, clean energy, NVIDIA. So that's why I'm continuing to trade them intraday. All right, fellas, that's the work today. If you're not a Foundations course member, you got till the 1st of November to get the better price. That's all I can say. And then tonight's Q&A session, the extra recording, was really well done. So there we are. Take good care, guys, and we shall see you tomorrow. And let's be ready for a frantic Friday. Tomorrow is going to be fireworks in the market. Bearish, volatile. Wow. It doesn't get any better than that for a trader. I'm using standard norms, very little overnight risk. Bird in the hand is worth two in the bush. Taking advantage of this while it's raining. That's what I'm doing. Take good care, guys. We'll see you tomorrow.